I think all three of us have been to the Hill multiple times to talk to these senators, to talk about give us the code, regulate it, and then when that happens, Katie, bar the doors. Watch what happens.
Hey guys, welcome back to Library of Wealth. Today we have millionaire and Shark Tank investor Kevin O'Leary, aka Mr. Wonderful, giving us an update on the recent cryptocurrency market crash, as well as his thoughts on Bitcoin, USDC, and stablecoins. He also discusses government regulation and policy with respect to crypto, and the biggest barrier to entry with adoption by institutions for Bitcoin. We'll hear about one of the biggest transactions he's ever been a part of, recently getting lost for 48 hours, and how he plans to handle this particular bank moving forward. He also discusses how this current inflationary environment will affect crypto markets. Will this be affected by the current crash? Let's find out. Make sure to stay till the end of the video as Kevin O'Leary gives us his current portfolio and the macroeconomic outlook for Bitcoin for this year.
This is a great question and also a great opportunity simultaneously. And I'll take a stab at it from the point of view of an indexer, a guy who provides sovereign wealth and pension plan services. And if you're a country with a lot of oil, for example, and you want to invest in the S&P, you ask indexers like me to create an indice that is X oil, X airlines, and you just invest in that. And so it's always based on allocations, typical sovereign funds. And the reason I bring up pension and sovereign, they are the investors. I mean, for all the excitement about Bitcoin, nobody owns it. I mean, it's a nothing burger asset in the context of sovereign and pension wealth. 800 billion is nothing. I know that sounds trite, but it's true. And so the way to get this asset to be a part of the real investment world is to get it regulated. Any of these assets, pick one. I personally would like to see stablecoins regulated first because it's easier to do that. But whatever happens, we need regulation, because then here's why this works. You want to have a 1% weighting in a $100 billion fund. A fund like that would have no more than 20% in any one of the 11 sectors of the S&P and no more than 5% weighting in any one stock or bond. That is a classic diversification strategy for long sovereign wealth, where trillions and trillions of dollars live every day. And so they would like to have 1 to 3% in Bitcoin. It's the one they want to start with. It's the granddaddy crypto. It's the one that's the biggest opportunity, and the one that, frankly, the managers understand because it's been in front of everybody since the beginning of cryptocurrencies.
O'Leary goes on to say that in 2021, institutional investors in Tesla started becoming more interested in the crypto industry, purchasing $1.5 billion worth of Bitcoin. Even Morgan Stanley and JP Morgan Chase have begun incorporating Bitcoin into their customer portfolios. For institutional investors, this was an indication that crypto was gaining mainstream acceptance, which appeared to be driving up prices. With a 185% increase in the crypto market cap last year, it came as a shock when the market's all-time high in Q4 of 2021 was slashed by $1.25 trillion. So in the wake of the recent crash, what role will institutional money play?
A seminal moment for me was when I saw the Canadian regulator issue an order that allowed for an ETF with the underlying asset being Bitcoin. Not a derivative, the actual asset was Bitcoin. That to me said, okay, here we go. Because I've always considered, and it's a personal opinion, that the SEC and the OSC work in tandem, and that basically Canada is a petri dish for testing ideas. And one of the big concerns about an ETF with Bitcoin, would it have huge tracking error? Would there be issues around the volatility of the actual ETF price? And if there was a 20% correction in Bitcoin, which happens all the time, that ETF has performed flawlessly. And I think it should set up for licenses issued stateside. Same with Ethereum, same idea. And it allows retail investors to invest without having to go through the whole crypto crap. So it was a seminal moment. I said, now I got to get involved. What I'm hoping from policymakers is to pick one thing and solve for that, then pick another thing, because crypto is so broad and diverse, and there's so many assets, and there's so much debate. You know, an NFT is, with utility, is that a security, is that a commodity, all those kind of things. Here's what I'd like to see happen, because for me the use case is so powerful, and it would also support the idea of maintaining the US dollar as a reserve currency globally. I'd like to and I've read both bills, so I'm just giving you a Cole's notes on what the Toomey bill and the Haggerty bill say about stablecoins. Not just USDC, all stablecoins. It's very simple. The Haggerty bill is 2 pages. Every senator can read 2 pages. And so the point is, they're asking for an audit every 30 days. What's wrong with that? Nothing. In fact, that would make you feel more confident about the asset. And secondly, they would like to have no underlying asset have a duration of longer than 12 months. No problem with that, right, Jeremy? That's not a big problem. And then just take that legislation and pass that one thing. Make that law for all stablecoins. Now, what would happen is, we all know that not all stablecoins are created equally, and if you're not willing to be exposed to an audit, then I certainly don't want to use you. You could still maybe go in a rogue environment, but I think that would immediately take, and in passing this bill, the regulator could say, we're going to license 10 stablecoins or 5 stablecoins and let them have little different attributes, just like a fund at Fidelity is a little different than Schwab or whatever, that's fine. But I don't want to see the government writing code. That's not what they're good at. Yeah. Let the private sector innovate with the legislation and let these stable coins flourish backed by the US dollar. 100%. Why wouldn't we all want that? I mean, that makes a total amount of sense, and I wouldn't be getting screwed on my real estate transactions. That's why I want it. And so, because it's a use case, and it's a very powerful one, and a lot of people then could take the benefit of being able to lend their stable coins and make 3 or 4% interest versus 20 basis points. That means they're losing 5% because of inflation. There's a lot of merit in picking one thing and forcing that through policy.
And the good news is that is the policy issue that seems to have the most bipartisan support to address.
Yeah, and I think it's an easy use case. Everybody understands the value of a stablecoin. It's not as speculative. Its value after being audited certainly wouldn't vary that much. It would be the one thing. Now, we're not going to get any policy till the midterms are over, but that's not that far away. Then I think this bipartisan effort that Jeremy's talking about could get the one thing. Let's get one thing done. This sounds like one of those speeches back in the Apple days. One more thing. Remember that?
Yeah.
It's the same thing here. I'm going to give you a real case study that happened last week that I think highlights why we need to get to what Jeremy's talking about. I do a lot of transactions in real estate in different geographies, and they're large transactions. And so generally what happens, you're going from one geography in US dollars to another geography in another currency. And so you have to transfer that money and to that new geography, then you have to FX it into the local currency, then buy the real estate. So last week we did and this bank is a large global bank. Don't have to mention the name because the story's not nice. And we transferred millions and millions of dollars to its corresponding bank in another geography. They lost it. They lost the money for 48 hours. Jeopardizing the closing of this transaction, and our team went out of their minds, including the Fed number, and they found it about 12 hours before the transaction was supposed to close, and they said, it was a back office error.
What people don't realize is that the money it's just like comma delimited text files that are floating around FTP servers. That's actually the money.
It wasn't. I looked at because I'm going to put in a formal complaint. We have a strong relationship with this bank. They owe us a lot for what happened. Yeah. I spent, even before the wire went, 18 minutes listening to a clerk read disclosure statements to me, which is a complete waste of both of our time. And I realized this is insane. This is before they lost it. And then we spent about 35 hours of staff time trying to find the money in their system. So, and I actually called one of the board members of the bank and said, have you ever heard of USDC? Have you ever heard of a stable coin? Do you know how it works? And have you done any work to try and figure out? Because this is commonplace. This happens all the time. It happens with smaller amounts, but when it's a transaction this size, they owe me interest for 48 hours on millions of dollars, and we're going to fight about that too. And some kind of penalty I should impose to maintain our relationship after what they did. But the point is, that board member doesn't know anything about this. And those bankers got to get hip to this stuff because they're going to get smoked if they don't provide service at some point.
And every tough situation in Kevin O'Leary's life, he says, is typically counterbalanced by something else. That's because he lives life with a portfolio approach. He doesn't risk it all in any one thing. On any given day, O'Leary says, he might be notified at 5 a.m. that one of his investments is about to go bankrupt or otherwise face an impending disaster. But that call can be interrupted by someone saying we just got an acquisition offer for $100 million in cash, noting that the cycle of good news is constantly counterbalancing bad news, and it happens every day. He says the key is to avoid getting too caught up in the lows or the highs, which can be difficult when everything you pursue is personally meaningful to you. Some things will work out, he says, others don't. What do you think about Kevin O'Leary's interview? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.